So you're a new or an experienced investor that's looking to build a passive income source by building a portfolio that pays them dividends on a consistent basis. But you don't know whether you want to invest in dividend yielding stocks, do the extensive research, find the yields of each company, and really customize that portfolio to your liking. Or would you rather take a more passive approach and invest in dividend yielding ETFs? Now it's a little bit more than that, and in this video I'm going to go over the pros and cons of each side so that you can make an educated decision and really build a portfolio that fits your investment needs. What's going on, guys? My name is Vince and welcome to the channel. Now you can probably tell by the subscriber count below that I just started out the channel and I could definitely use some help. So after watching the video, if you liked some of the content, you found some value, and I was able to answer some questions regarding dividend paying stocks and dividend paying ETFs, please consider liking the video and subscribing to the channel. Now without further ado, let's get right into the video and figure out whether dividend paying stocks or dividend paying ETFs are better for your portfolio. So before diving into the pros and cons, there's one overarching question that you guys need to ask yourself, and that's whether you want to be a passive or active investor. Now on the active side, that's going to require you to do some stock research, some due diligence, looking up the yields of each stock, and just really customizing your portfolio from scratch. If you want to do that, that's great, and there's pros and cons of that side. On the flip side, if you want to be more of a passive and more laid back investor, and you're just looking to invest in an ETF that pays you dividends over time, that's also great. There's pros and cons to that. So first, guys, just answer that question. It really depends on the time that you have and what style of investor you are. So let's start off with the pros of building a portfolio with stocks that you choose. And obviously the first one is going to be the customization that you receive. You're able to choose the stocks that are in the portfolio. You're able to choose the yields that you're going to be receiving. And with an ETF, you have no choice. You're not choosing the stocks that are in there, and you're not choosing the yield that you're going to be getting. So by choosing it yourself, you're really saving that customization of building a portfolio to your liking. Now the second one, which goes hand in hand with that, is the more consistent dividend yield that you're going to be receiving if you're building it yourself. You know the stocks that are going to be in it, you know the yields that come along with those stocks, and you're able to buy and sell ones, depending on, I don't like this yield, I think this one's better, I don't like this stock, I think this one will do better. So you can make those decisions on the fly and it's all up to you. On the ETF side, you're not able to choose the stocks, and if you look historically, they're always rebalancing that ETF and they're always changing the stocks that are inside of it, and the dividend yields are also changing all the time. So if you're looking to have a very consistent income and you're looking to build a passive income off of dividends, having that variability with ETFs is probably not what you're looking for, and you probably want to have a little bit more say on the yield that you're going to be receiving. Now the third pro that I see is that you're not paying an expense ratio for your ETFs. Now before the zero commission brokers, obviously the argument was that that expense ratio is much less than the $5 or $10 you're paying per trade. But now that you have zero commission brokers like Robinhood or Webull, there's really no excuse to be paying an expense ratio if you're willing to pick the stocks yourself. Now with the pros comes the cons, and the first con that I see is just the sheer amount of research that you're going to have to put in to really find the stocks that you like. Now if you're into that, you want to take the time to research stocks, pick stocks, then I'm totally with you. It's a great thing to learn and a great thing to get used to doing. Now if you don't have the time, your job doesn't permit, or you're not in that that time where you want to be looking at stocks and picking stocks and researching dividend yields, then it's never a bad thing to just invest in a dividend yielding ETF. Now the second con that I see is that in the beginning of picking stocks, you're going to have a small portfolio and you're going to have much less diversification and a little bit more market risk. So with the ETFs, there's going to be 50 or 70 stocks right off the bat that you're investing in. And one move in one stock is not going to kill your portfolio or really make a net gain or net loss in your portfolio. With picking stocks yourself in the beginning, before you start to really build that portfolio, you're going to have maybe 2 or 3 stocks, and one movement in one of those is really going to make a swing in your portfolio. So guys, moving on to the ETFs, the pros and the cons, really the major pro of these ETFs is the time that you save and the research that you save. That's really why they even built ETFs in the first place, right? They knew people were looking to invest in multiple stocks, multiple companies, and they had a great idea to just, build one fund that had all of them in there. So, the major pro of an ETF in general, not just a high yield dividend ETF, is the time that you save. If you're an early investor and you don't want to take the time, a high yield ETF that is, paying you a certain yield, a high dividend yield, is a great investment. And, there are cons that we'll go over, but, in the grand scheme of things, if you're not looking to pick stocks, you're not looking to build a portfolio yourself, and you're just looking to take advantage of the market and, just sort of average with the market, then buying a high yield dividend ETF is a great idea. Now with the cons, obviously, like I said earlier, is the expense ratio. And as you build that portfolio up, that expense ratio is going to get larger and larger. The percent that you pay is not going to get larger and larger, but due to the value of your portfolio increasing, the dollar amount that you're paying as a fee will get larger and larger. So, in the beginning, that expense ratio is not much. I think it's like some of them are 0.05% of your account value. And, that's nothing for, small accounts. So if you're a small investor and you're just starting out, don't worry about that expense ratio just too much. Once you start to have $100, $200 to $1 million in an account, obviously, that percent is a good amount of money per year. So that's when you start to reconsider the ETFs. The only other con that I can see is, like I said earlier, you're not able to choose what's in them. You're not able to choose what's going into that ETF. So if you don't agree with some of the decisions that the company's making, like say, the Spider ETF or a BlackRock ETF or, any ETF that's out there, you're not able to tell them what stocks are going into that. So if you don't really care about that, then it's not so much of a con. But for someone that really wants to know what's in their portfolio and then, and have a decision on what's in the portfolio, then that would be another con. So I'll share with you guys, my plan right now with dividend yielding stocks and ETFs. I'm an early investor into this type of portfolio. I've had portfolios in the past, but I never focused so much on dividends. Now my plan as it starts is to start investing in dividend ETFs, and start to get my money into those accounts and start to get the dividend yields. Now, as those accounts grow and as those yields grow, I will start to look into dividend stocks, start to do my research, start to, take the time to learn about that. And then I'll start to pick the stocks that I like and, sort of transition from ETFs to stocks over time. So if you want to get your money in the market now, you want to start taking advantage of dividends now, go ahead and put some money into the dividend ETFs. You'll start to gain money on those. And over time, as you have time, as your time frees up and you start to research stocks, you can start to look at the stocks that you want to build that portfolio with. So guys, I hope you found some value in that, the pros and the cons of each side. They're obviously both great investments. There's really no huge negatives that you would outweigh one or the other. It's really, like I said in the beginning, what type of investor that you want to be. So if you guys have any more questions about dividend stocks or dividend ETFs, feel free, let me know down below. And if you guys are doing a strategy right now or implementing something in your portfolio, I'd love to hear about it down below as well. So guys, I hope you enjoyed the video and I hope to see you in the next one.